Good morning, Paul Georgie from Allendale. It's June 4th, 2010. Well, there's excitement in the financial world this morning, and that's going to have its impact on grain prices, we believe, here, at least initially today. The dollar made new highs here, the recent move up 62 points. Crude is down 151. Stock market's expected to open based on the futures market here, anywhere from 150 to 180 lower on the day. Gold down $5 or so here at the moment. Why? Because of overnight news. Hungary, the financial minister says that Hungary has economic problems, and that has impacted the euro currency. Also, rumors from the Swiss that they will be taking some big losses because of derivative markets. And then the unemployment number came out here, 430,000 more employed. However, 411,000 of that came from the data collectors for the census. So that was a disappointing number, causing pressure to the stock market and strength to the U.S. dollar. The grain markets this morning, overnight, we were down 1 to 2 cents. We'd expect that we probably will open lower than that. We had export sales come out this morning from the USDA as well. Corn export sales, they were looking for 700 to 1.2 million ton. Came in at a very low 313,000 tons. Zero of those export sales were made to China last week. Weather is ideal, wet and warm, excellent for corn growth. And the positive side of the thing is that the corn market is extremely oversold right now, even with the little bounce that we had yesterday. But from a technical perspective, closing below recent support areas both days, the last 2 days, could weigh on this market here this morning. Technically, we get support in corn around 344.5, resistance up around the 351.5. Pretty narrow range, but that's what we're dealing with here this morning in corn. In the soybeans, export sales, we're looking for 200 to 400,000 tons. Came in at 148. Zero of that sold to China, either in new crop or old crop. Yesterday's excitement with the large run in the futures market yesterday came on the heels of fund buying. They bought anywhere from 3,000 to 5,000 contracts. The question is, will they be back today? Many times, once you start to see short covering occur, it usually hits the market for 2 or 3 days when the funds are in there buying. So could be supportive to the market here if the funds come back in and buy. But with all this financial market news, I'm sure they'll be sitting in the wings here for a little bit here this morning. Wheat market, not much to say about that. Again, trading that market technically. But harvest is underway in Texas and Oklahoma. From what we're hearing, the quality is very good and the yields are very good. Chart support in the wheat, we've got 435 as some major support here initially, and then down to 425. Resistance up around that 450 area. In the livestock trade, that's where I think the biggest impact from this financial debacle here this morning, you might call it, can come in. We could see quite a bit of pressure in the cattle market. Sold off yesterday in the futures with a strong cash trade. We had 95 to 95.5 paid by packers in the Southern Plains yesterday, from 152 up to 155 for cattle in Nebraska. That was on the heels of lower cutout values. Choice yesterday was down 126. Select down 148. Packers margins still, with all this adjustment in the cash and in the cutout values, still have the Packer margins in the black. However, those margins are being trimmed very quickly. The futures market is going to be affected by outside trade here today and attitude of the financials. We expect markets to be under pressure here early today if we see any kind of adjustment or turnaround in the financials. that could provide some support to the cattle market here later on today. Technically, we got support in the August cattle around 89.15, resistance up around $91 in the August contract. In the hog trade, news there between Russia and the U.S. on the poultry deal. Weeks ago, we had heard that they were close to completing that deal. Well, it looks like we're still close. Nothing done yet, but rumors have it that Russia has given out 25% of the allocation that they usually got from the U.S. to other countries. So that can't be good for the poultry demand, and that certainly will weigh negatively on the pork attitude here. The technical action yesterday was dominated mostly by spreaders. Probably again today as the trade and the funds move their positions from 1 month to the next, and they're in the Goldman roll, and those kind of actions that happen on a monthly basis. Technically, the market overnight went right down to the long-term trend line, which crosses around $81 in the July contract. That would be our initial technical support here this morning. Resistance up around 82, and then 82.90 in the July contract, the hogs. The cash market there a little weaker here this morning. Cutout values were down 48 cents yesterday. Our overall attitude on the livestock trade is that cattle trade will continue to work lower here, but supplies are tight for the near term, and that could give us some rally as we do get some fill-in buying for Father's Day and 4th of July in the cattle. The pork complex, very tight supplies there. Overall fund attitude is dominating that market right now, but we believe by August we will see fundamental issues control that market again. So stay in touch with Allendale's research. We'd be happy to answer any questions you might have. Call us at 800-262-7538. We wish everybody a very successful trading day today, safe weekend, and we'll talk to you on Monday. Thank you.